it. This is what I mean when I say beat down chart. Look, the chart came from 1 million all the way down, right? But we knew we had one line of defense. Let's delete all this. We had one last line of defense before this 1150 pivot was all we had, okay? Easy down, easy up. Last line of defense right here, gap fill pivot. After this gap fill pivot here, what do we got? We got nothing. This is the last thing that I can risk off of before it's not till here, right? So we have that, and now if we got to think about this, okay? If we're going to short intraday off this level, do we love that this is right here? I don't love it, but I don't love that, but I do love 1, 2, 3, 4 days, 3 days up, right? I also don't, this is right here at 411, but that's far away from 650, so I don't care. 420 pivot and 411 pivot are far away. I can short it, get a big gain by the time it gets to there, so that's not going to bother me. This one I wasn't really loving at 550, so we mark these off now. The gap fill pivot we might be able to risk off of, the pivots below, and the most recent pivot is always the strongest pivot in my book, right? The more recent the pivot, the better. So now we go to the 1 minute chart. So what happened here? Guys, I knew this is the gap fill level that I kind of wanted to risk off, but I also know that I don't like to really short below the 61 to 78% fib. Now, this can become a problem if there's a nice level below that, okay? This is the ideal level. Anywhere above, really, anywhere, it's really anywhere above the 61 fib is the ideal level, but we have a very strong gap fill below that, so we know it might just reject this level, okay? So what happened? On this pop right here and stuff, I didn't take the short yet because even though I could just risk above this gap fill, I just don't really love that. I want to prove to me that this, if I'm going to risk this level right here, I really want to try at least twice, okay? So we got the open stuff, boom, it came back down, it came back up again, boom. I was like, all right, now maybe I can lower my stop to right here. And then it tried one more time. Boom, stuff, I shorted right here, and now I'm going to use this as my stop. Because it didn't make it to lower high position, but it tried 1, 2, 3 times. Once I see that, I'm saying, okay, I can lower my stop down. That's it, because it's proved to me multiple times that it can't go, and that's pretty much enough confirmation for me to be able to lower my stop to here so I can short right here at 6, risking 650, and not have to risk till up here because that doesn't make sense, all right? Now, guys, this is the thing that you don't understand about trading. Well, maybe you understand about trading, okay? The people who got FOMO and took it at the 50 fib, who were risking the pre-market high, okay? You were risking about 80 cents, let's call it. The people who waited and took it right here, 605, risking 640, what trade do you think is better? Okay? If you took it on this stuff, you got in at 605, 602, risking 45 cents or 50 cents. Do you think you have a better trade than the guy who, what trade do you think is better? The guy risking 80 cents or the guy who has now a better entry on more confirmation, only risking 50 cents? By far, the guy risking 50 cents has a better trade. Because this guy's going to get 2 Rs or something, this guy's going to get 4 Rs. Right? Let's say you shorted it right here. 630 risking. That's about 80 cent stop, right? So 630 down to friggin' 550 is 1 R. 2 R. Possibly get 3 R, right? But this guy who's got only a 610 to this guy's got a 40 cent risk. Look how fast this piles up, right? 1, 2, 3, 4, 5, 6. It adds up much faster when your risk is a little tighter. It makes all the difference in the world, you guys. And that's why I love when we have daily levels in lower high position. Let's say if this gap fill was right here. Now we popped up to lower high position. We stuff, boom, smash it as high as you can. You get filled at 680. You're risking friggin' 25 cents or whatever, 30 cents. Those are when you have all of a sudden, or even better, my favorite ones is we stay up near the pre-market high. We also have a daily level there. The market opens, the stock tries to break over the pre-market high in that daily level, stuffs instantly, boom, you hit it. 20 cents risk, 20, 40, 60, 80, $1, 20. Next thing you know, I have a 10-hour trade. Because that's all I care about when I'm shorting. I want to put myself in the position to have the best risk-reward trades on with the littlest amount of risk and the highest amount of reward. That's why I don't love when this pivots right below, and I don't love when we don't make it up to the lower high position and this daily level's a little below. Unless I get a real... I mean, guys, honestly, you can take this kind of stuff. You don't have to risk the pre-market high when you do have a gap fill pivot here. This first pop and stuff, you definitely could have taken that, risking above. But I just waited for a little more confirmation. Luckily, it didn't just tank without me. But in general, you don't want to take it while it's going up. You don't want to take it while it's going up and then have to risk off this high. You want to see it stuff and then risk right above it, because or else the risk reward blows. No good. No good. You're going to end up risking way too much and getting a turn what could be a 5 or 6 or 4-hour trade into a 2-hour trade. That's caca-poo-poo. We call that caca-poo-poo. That's FOMO. FOMO, caca-poo-poo. You know. All right. Next we had VVPR. I'll show you what happened on VVPR. Actually, VVPR is a perfect example of what we were just talking about, okay? Now, because if you look, guys, see this level right here? 460? This is exactly what I was talking about. A daily level well below the fib level, okay? Look, very clear, very recent pivot. Everyone can see it's the last place it truly failed, okay? So you had kind of like a day 1, day 2 gap up. Right to this pivot that everyone can see, 460. The problem is, okay, the problem that you end up having is look how far we are off of the pre-market high. It's kind of like what ZAPP did today. Way off the pre-market high, way off red to green. But this is actually not that bad because this is a pretty good like trigger candle. You get a fake breakout. You get a fake breakout. Boom, stuff back down. Even though it whipped back up too, but still. You know there's a daily level here. You know there's intraday levels here. If you get this kind of pop and slam, you can short it when you stop just above. Even on this, you got to be quick and really paying attention to it. If you're waiting for it to come up here and you have price alerts set. If you don't have price alerts set, obviously it's going to pop, boom, real quick. But if this pops, fake breaks out, stuffs, you short it right here at 445, stop at 465. I mean, you're pretty much rocking and rolling right away. You can get a lot of odds quick like that. At least 3 or 4 odds, even though you're down low in the range. Even just right to here, right here, right? If you pop fake breakout stuff, you short 450, risking 15 cents, right? What, 35, 20, 5, you know, you're already at 5 or 6 odds by the time it flushes to here. So if you do this all the time, it doesn't matter if you lose one here and there because you're getting tons of good odds on the other ones. Now, again, preferably in a perfect world, it comes up to this daily level near lower high position and it extends even more. So in a situation like this, you have more things working in your favor because look, that's only a 10% spike, 12% spike to a trigger. If we popped up to this daily level, now we're really extended, 23% to a daily level plus lower high position. Now we have way more confluence. We have a big spike into lower high position. We have another daily level. We have a above the median spike. So if we get a trigger up here, now we're really like, now we have a lot of room to the downside for reward on a good gap stat stock. It's just sometimes when these really good gap stat stocks open this far at the pre-market high, they just pop into the next daily level and dump. And that's fine too. You just got to be quicker on it. You know, so it is what it is. But preferably, like I said, the daily level is also closer to pre-market high. But that doesn't always happen. So let's see here. I'm going to be a little pissed if Tesla just totally tanks without breaking the high, but I'm still not going to take the trade. Just too much, but it shouldn't make a new high today based on the daily candle, but you never know. Anyways, Okay, so next, guys, I'm a little disappointed in ZAPP, but there's really nothing you can do about this. Honestly, there's nothing you can do about this. This is what has to happen. Okay, 10-minute EMAs. Is ZAPP gapping below the 10-minute EMAs? Yes. It really, guys, it actually played out pretty perfect because we do have next pivot right here. But the problem is it gaps so far down. See these are the pivots. These are wherever the gap down opens, if it's below the 10-minute EMAs, you look to the left and say, where's the next pivots? Right here, right here, right here. This little area right here. All next pivots. That's where it should stop. Now, that one's right. So we'll call it right there, that area. It didn't even pop into that area and reject. So you would have had to friggin' take this just blindly at the open. As soon as it opened, just get in short and hope it doesn't spike back up to here, or even here. You know? Because if it breaks through these pivots, it might want to go all the way back up to here. So this makes it way harder, right? You're like, where are you risking off? You just have to short up the open. You're just going to short it at 13.25 and say, I'm risking like $1 or something. Ideally, this candlestick would have went like this. Ideally, that candlestick would have just popped up, slammed back down short. Now we know where our stop goes, above next pivot, and then we're in the driver's seat. It just didn't do anything. It just opened and started dumping. Right? That makes it much more difficult because you just got to take the short at the open. Unless you're trading at crack of dawn. Unless you're trading at the crack of dawn and you're entering over here on like next risk, you know, this is crazy. Over here you're saying, okay, next you have pivots right here. I could get in below those pivots. Either way, you're not getting in close enough to red to green because it's way the fuck up here unless you got in yesterday. This is how they screw you on these piece of shit stocks. Big spike, and then by the time the market opens, you're a mile off the pre-market high. You already dropped friggin' like, 50% or something. It's crazy. It's retarded. That's just stupid. I think I already dropped 30% before the open, you know? The only other way that you could possibly trade this, you guys, is by using the 5-minute strategy. But look, even still, do you guys see? There's no pop into the 5-minute EMAs and dump. It's just a open and flush. There's nothing. The only other strategy, if you're not using that way, you use the 5-minute chart, and I still would have wanted it to go like this. I still would have wanted to pop up to the 5-minute 21.34, hit those, reject, short, stop above. But so there's really, what are you going to do? It's just they made it impossible to get a good trade on, and that's just, it is what it is, right? Fuck it. They suck. They're assholes. They're good market makers. What are you going to do? Nothing you can really do about that. All right. Let's see here. MSTR didn't set up. NIFT is just grinding, so I didn't fuck with that. Tesla trigger at open on the watch list. You definitely could have had a sick trade on that, but I missed it. Guys, just gonna say, right? Look, guys, when you're on the 10-minute chart, pre-market data off, guys, look at this, right? Do you expect this to keep breaking out so easily? I mean, it's just, look at how many days it's gone up, okay? Look at this, right? We're extended. So, yeah, sometimes it's going to have problems at the highs. Not doesn't mean it can't break out later in the day. But, guys, this is, if you're not going to wait for a secret setup, this is what you want to see. Ideally, this would have even popped a little higher over this level, but this is a trigger candle right here, right? The stock market opens, it dips, boom, it tries to break over yesterday's high. Ideally, I would want to see it a little more over because guess what happens? Can anyone tell me what happens if this goes a little higher over yesterday's high? Well, that's what it is, but why do I want that to happen? Yeah! Exactly. This is going to track longs to try to buy it. And when it slams back down, now we have overhead baggies. That makes it harder to reclaim after. But if you're quick enough, and this popped up to 266, as soon as it falls back below 265.50. Boom, you're short. You got 50 cents risk. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's a fucking massive trade right there. Even this, it popped up, it fell back below this level. Let's say you got filled right here, 265. Risking, let's say you risked $1, 265, right? 264 is 1, 263 is 2, 262, 3, 261 is 4, 260 is 5, 259 is 6, 258 is 7. Dude, you literally need a shitty win rate to friggin' take trades like that. That's it. All you need is a trigger candle on an extended stock, extended off to 4 and 8. Right? Look. So look, yes, the bottom tail came back to the 4, but at before, look, it opened up here off the 4. Look, 4 to the touch, 4 to the touch, 4 to the touch. When it opened, we had a little room to go back to there. So if you get a fake breakout, we anticipate the bottom tail back to the 4 because this thing's riding up the 4. Right? So you get the fake breakout, you short it, you take it back to the 4, you cover some, now you're in the driver's seat if it goes back up, or you cover all if you have that big of a trade. If you get a friggin' 5-6 hour trade, just get out. Right? That's all you need. Boom, boom, short. Cover into the wash. Cover some maybe at the pivots. Cover some at other support. Get out. Or you look at the hourly EMAs and see if you touch those. Came close to the 21. That didn't even come close. Sometimes I'll look at the 30-minute chart and see. Well, look what I found on the 30-minute chart. Well, look. Here. Here. Guys, this is why I'm talking about being a detective. Does this help me? Does this help me right here, the hourly chart? No. Okay, so let me jump down to the 30-minute chart. Does this help me? Yeah, it fucking helps me. Look. A slice through the 21 and reclaim. A slice through the 21 and reclaim. A slice through the 21 and reclaim. A slice through the 21 and I cover. Have a nice day. Because it did the same thing over and over and over and over again. This can help you long. It can help you short. You have to find on the time frames. You got to go through the charts to find the time frame that's going to help you. Right? What? If you're on the daily chart. If you're on the daily chart and you're looking, it's riding up to 4, but is that going to really help me? I don't know. On the hourly chart over here, well, the strong move is riding up the 8 right here, riding up the 8, riding up the 8. But today, this wasn't really going to help you unless you want to try to judge. Look how far it's stopping this distance from the 21, right? I don't really like that because you're really like, what's that distance? I don't know. So we go down to the 30-minute chart. Now we see, it likes to wick a little below the 30-minute 21 and reclaim. Yep, that's a fucking algo. Something's buying it at that fucking exact place every time. Right? So that's why I want to cover my short. Or go long. Whatever. Point is, you use it. You have to be a detective and sniff out what's going to help you be better at trading. Right? Sniff it out. Sniff it out. So, let's say, for example, SPY. Let me delete this crap. It's like we always talk about the 10-minute chart, right? Oh, I don't have my 50 on here. One sec. Okay, so now look what happens. All right. First of all, right here, look how we went a little below the 50. All right. Then we had strong move up, flag off the 8, yada yada yada. We come to the 21, but now look, guys, comes back. Look at this. A little below the 50, a little below the 50, a little below the 50. So that tells me that I could put on another, maybe like a 60 EMA if I wanted to, and it'd probably be penny touching, or a 70, whatever. I don't use those, but I would just judge it. But that's also, or you go to a different time frame, right? And you say, oh, well, look, it likes to bounce off the 30-minute 21, bounce off the 30-minute 21, bounce off the 30-minute 21. Go through the hourly and see if that helps. Only making it to the 8 on the hourly. That's not really going to help me. It's just what I do on every time frame. Look, the daily chart. Look, 21, 21, 21, 21, 21. Is that an algo? Does human beings actually all decide to buy it at the same place every time? I don't know. Maybe not. Maybe it's an algo. But I know one thing. This is fucking happening and it's real. Right? That's it. So, you know, you stick to your fucking setups and you try to figure out, where is this happening over and over again? Shit like that. And that's the best way to do it. I don't know how I got off on that, but whatever. Point is, you know what I mean. So now we're just extending, and now look. Tomorrow, this thing's going to just probably... Guys, the thing about SPY that's dangerous is look how little... None of these candles are really getting like crazy extended. They're just little grinding. But I would expect if this gaps up tomorrow big on CPI that we would get something like this. If we get a big gap up on CPI numbers, I will definitely be looking to short it. This happens all the time. Go, gap up, red. I mean, I would definitely like it better if we had days looking like this. And then a big gap up. But we'll have to see what happens. No matter what I think's going to happen, guys, I still have to see the price action. I don't just short blindly. Right? Because look, these 2 days are interrupt days. These are flag days. So they kind of like, we had 1, 2, 3. If we got a big gap up, gap fell short. But now we had 2. Even though they were still going up, they were still 2 flag days. And now this is day 1 after a flag. So now 1, 2. It depends how big the gap up is tomorrow. Got to see it. But, yeah. So, that's good. What else did we have? That was pretty much it for today, right? I don't think AP did anything. Oh, AP didn't fucking... I didn't hear my price alerts. Wait, what happened? Don't tell me. Oh, alright, it didn't make it. I was going to say, I didn't hear my freaking price alerts on AP, but it did make the top and tail daily we were talking about. It just didn't make it to my price alert. It was like around here. I know, I set my price alert at 150 something, I forget, so I could see if it would come up to here. Yeah, this zone right here. That's too bad, because see, this is what you want to see. A little higher, though. Let's see if it stopped at a daily level. No, this one didn't have any good daily levels, really. Little crappy daily level right here. This is, guys, this is right here. This is barely a pivot. That's crazy, but that might be a pivot visually, but it's not a pivot, like, actually. The best pivots react the price strong off of them. This is going down anyway. It's a quick little pop back and keeps going. It doesn't... See, these are the pivots that react price in a strong way. Strong reversal. Boom. Boom. Right? Pivots. They reverse price strongly into the next direction. This is like, yes, a little bit of a pivot, but then you might as well count this pivot. You might as well count that pivot. You might as well count that pivot, that pivot. These are all pivots then if this is a pivot, right? So this maybe I would count right here, but that's about it. Not all those other little things. This could be considered an ultimate low pivot right here because it did bounce decently off it, but this shit is trash. But anyways, point is, if this daily level was actually a real daily level, maybe it came up to 146, now you'd have a $0.50, all right? Now you'd have a $0.50 here, plus that pivot, and plus you'd be closer maybe to the 50 fib. Yeah, so you'd be close to the 50 fib. That would be good. You have a 50 Fibonacci, a daily pivot, plus a $0.50, and you get this stuff trigger right here. But up here, right here, that would be sick. Look at that trigger. Boom, look at this. Fake breakout stuff. This is fucking Trigonomics 101. In fact, if I was looking at this, even if I didn't even see a level I love the most, but I saw this kind of fake breakout stuff trigger, I'd probably still short just because that's such a sick trigger. Boom, bam, huge. This is beautiful. Goes up, goes down, opens, traps longs, and slams super hard. Very hard to recover from that. That is a beautiful trigger. You could watch this. Boom, it starts to slam. You short it right here. Once it falls back below this low, short it right here, 132. Risk it 5 cents. 1, 2, 3, 4, 5. That's just beautiful. Just beautiful. That is a beautiful trigger right there. Trigger, guys. Trigger. Trigger. Flagpole, flag, trap longs, stuff it in their face. Have a nice day. Trigger. Trigonomics, highest volume of the day. Bye-bye. Sayonara. Have a nice life. You're not going back up. Get it? Got it? Good. All right. Any questions? Going once. Going twice. 3 times, my lady. All right, guys. I'm going to start the recording because it's like 25 minutes is where I like to keep